Welcome to another episode of Back and Forth at Becker and Orr. You can see Kevin and I are ready to go, and we have a list of fun topics right on the bottom of the screen there. We'll talk about the big Foo Fighter concert over the weekend. We'll talk about an anomaly we've seen with the Nasdaq numbers in July. Lots coming up. You're going to want to stick around.
Yes, like always, you can find a whole bunch of our videos on our YouTube channel, or just go to our website at beckerorr.com or like us on Facebook. You'll be able to pull up all the content we've been talking about, this and a whole bunch of other things. But to get this kick-started, Clint, Nasdaq in July. What are we talking about here?
This has got to be a new saying. People have been saying sell in May and go away. I think we have to come up with a new term, buy in July, and we'll see why. We looked at the sell in May and go away a little while back with another video. That data didn't really pan out. This is from Seth Golden. It looks at from the financial crash, so 2008 right up until today, and it looks at the Nasdaq index in the US. And you can see some months, like you'd expect, they're kind of 57% positive, 64% positive. But look at July, 100%. Every single month of July from 08 right up until last year was positive with an average return of 4.2%. So 13 years in a row, the Nasdaq has been up in the month of July. What do you make of this, Kevin?
Yeah, I guess a lot of this has all come down to the fact that, traders are thinking about we're going to go on summer and everything else. So I don't want to do a whole bunch. Let me get out of the market in May. And, I'll come back that September, October time when summer's done. I'm planning other things. So there's going to be limited stuff going on. But reality is you're seeing right there has been 100% of the time in the last 13 years, you've made money in the Nasdaq by being in. So I don't think it is. If we take a look historically as well, you're talking about the fact that it's not that May through September, October hasn't made money. It just hasn't made as much money as November through April when people are around. So, I remember looking at a chart the other day that was mentioning that if you'd have gotten out in the beginning of May and gotten back in November on the Dow Jones, you'd have made $164 million on $1 million since 1896. If you'd have left the money in, you're over 650 million. So I think that this is something that we got to consider. But yeah, what's your take? What should we be doing here?
I want to pull the chart back up on the Nasdaq because that is just remarkable. 100%, 13 years in a row, the month of July has been positive. I can't think of a good reason why July is suddenly a spike for the Nasdaq. But these things kind of happen, right? Does that mean that every July going forward is going to be positive? No, things can change. But it kind of gives you the proof of the pudding there. Like you said, people should not be trying to jump in and then jump back out. The Dow Jones, the sell in May and go away. The data says it did not work. And here's just another proof in the pudding there for the Nasdaq. You've been missing out on gains, particularly in the month of July, if you're trying to do that timing jumping in, jumping out of the market. So it kind of gives you that kind of buy and hold mentality. At least that's my takeaway here.
Yeah, I think it's the same thing. And I think that, investment people like us just love catchphrases, right? We've already got sell in May and go away. Now we want to buy in July. That's the way it should be. So all we have to do is come up with the right when we go from there.
13 years in a row. We're going to have to look at this at the end of July, see if the Nasdaq can do 14 in a row.
I think we're going to be that way without a problem. Now, you and I are both big Foo Fighter fans. There's no doubt about that one. I think we both want to see them come back to the city one of these days. But if we can't, they opened in Madison Square Garden. What happened?
Yeah, I'll admit I was jealous. They opened Madison Square Garden. You can see the New York Times headline at the bottom of the screen there. That was on Sunday. Sellout crowd, Madison Square Garden. We're just opening back up here in Manitoba. We're going to get 25% next week. They had tens of thousands of people jammed together in the arena watching the Foo Fighters. First thing that came to mind is I wish I was there. I was kind of stuck here in Manitoba. But number two is is this the future? Is this what we're going to see when we eventually open up in Canada? Are we going to have the same kind of thing? All right, you can go to the concerts, you can have people together, but everyone's got to be fully vaccinated. Do you think that's what's on the horizon?
Yeah, I do. I believe that that's going to be the start of it. Now, whether that lasts for 6 months, a year, 2, 3 years, whatever the case may be, but I think that's going to be the way that you're going to have to start getting into these sort of things. I know that Bruce Springsteen is doing the same thing in New York right now. You have to be double vaccinated to go and see him play. I think that's going to be the majority of things when Vegas, now that it's all opened up. Now, there may be some tweaks here and there, but I think that's going to be the start. Everybody wants to make sure that they're safe and secure, and this is the only way to do it. So, it's another one of those ones where you get a perk if you get vaccinated. So, I really wish I was there. All I can do is try and pull up clips from somebody else's phone to see, but hopefully one of these days I'll get to see something different than that. Anything else that you
I'm in the same boat. I'm in the same boat. They've only been in Winnipeg once. It was years ago, and I unfortunately couldn't go. So I'm yet to see the Foo Fighters. So maybe one of these days, maybe after the pandemic, they'll do a tour, and you and I can both go. That'll be a return to normal, right?
That's our bonus.
There we go. There we go. Well, shifting gears here, we'll pull up another chart. This one, it's a bit of a ratio, so I'll explain it, but it's inventory sales ratio. So what it looks at, this is for all retailers, is if the line goes up, that means they got lots of inventory in hand. They got more inventory than people are buying, so they got lots of stuff. And if the line goes down, that means they've got less inventory, so more people are buying and they have less on hand. You can see there's a big spike at the onset of the pandemic, which makes sense. Things are shut down. They got more inventory, then eventually that adjusts. But look at where we are now, Kevin. We're at like record low numbers we haven't seen since they started doing this chart. They've been doing it since 92. So what does this tell you? What do you think when you see that record low number when you look at inventory compared to sales?
Yeah, I think it's sort of a twofold scenario. I mean, being shut down for so long, there was no manufacturing. So nobody was being able to make anything. So if you couldn't make it, and you could order things online. As soon as the inventory was gone, there's no new stuff to replenish it with. That's one sort of thing. And the other thing that's going to lead to, I think, is going to be, this is why we're getting that inflation, whether they consider it to be temporary or anything else along those lines. Limited inventory means everybody's competing for it. They can jack the prices up. All you have to do is look at the stuff that goes on for summer. Kayaks, Sea-Doos, things like that. They're all at record highs for prices. Why? Because there's not enough inventory to be able to deal with it. So will this problem solve itself quickly? Depends how fast we open is going to be my sort of scenario. What's your take? What do you think the numbers are going to do? Is it going to get lower, or are we going to start to see a normalization of this?
Yeah, short term, they could go higher. I think there's supply issues there. So we kind of have a pent-up demand. People are all jamming into one sector or one area at the same time, which makes sense because we've been shut down for a while. Now they're all rushing into the same sectors. And then on the other side, you've got reduced supply because I'm sure the manufacturers would love to have more product. I'm sure the retailers would love to sell more. They just can't get it. And that's what's creating this big push. That's really what that graph is showing us. But I think those supply issues eventually get worked out. I mean, there's money to be made, so I imagine the manufacturers are going to want to produce more, and they'll have to figure that out. But how long does that take? I'm not sure. Is that going to be a matter of months? Does it take a year, 18 months? We're going to find out. I don't know the answer to that, but I do think the supply side proves transitory, and I think they eventually figure it out, and that helps solve some of the wrinkle there.
Yeah, I think you're correct on that one. And I mean, even though that chart we had there was over $1 trillion worth of it, I mean, we're now at about 650 billion. So it continues to slide and slide. And yeah, eventually you got that stop, but you're right. It's probably more transitory and everything else will go from there. Well, now that we've dealt with the retail side of things and we've seen this inventory collapse, what has happened in the crypto market since we last started talking about it?
Speaking of collapses, that's a perfect segue. We talked about the crypto market not that long ago, and at that time, it was almost 2.1 trillion. You can see the number there highlighted at the top of the screen now at 1.37. So you've seen about $700 billion just get erased from the crypto market in a matter of about 1 month. So that's about 1 month, and the entire market went down about 35%. I mean, you can look at the individual prices there. Some of them got cut in half. Some of them went down further. You've seen just kind of a washout when it came to cryptocurrencies. I think the news there, Kevin, correct me if I'm wrong, I think people are pointing to Elon Musk. They're pointing to China. There's a couple of key items there, right?
Yeah, I mean, the crypto market has become very much a driven by sort of instant news that goes on. So, I mean, Elon says, oh, we're going to accept Teslas with Bitcoin. Bitcoin goes up. All of a sudden, no, they're using too much power. We're going to take them off. Bitcoin goes down. But I mean, you combine that with the fact that China has now suspended mining in some places in the country. And that's huge. That has just taken it all apart. And all of a sudden, everybody's realizing that, oh, well, maybe this isn't the way we want to deal with things. Let me get all of it out. You're still going to get those that are going to hold on. And eventually, you're going to get that rise out of it. But yeah, I mean, this crash could, I mean, Bitcoin's under 30,000. Could we see 10? Always a possibility. I won't guarantee it one way or the other, but it is one of those ones that we've always explained that if we thought the S&P was risky, here's what we're seeing with cryptocurrency going forward. So yeah, I think some of those factors and whether it ever becomes accepted, we're going to have to find out and see down the road. Anything else? Like, do you believe that we've got that same purpose or?
Yeah, well, again, these are early days for the market, so it's not surprising that it's more volatile and has more crashes. Because if you think of the stock market years ago, like it was far more volatile, and eventually it matures and becomes a more stable asset class. We're nowhere near that with cryptocurrency. This is still early days, so incredible volatility is kind of the price you have to pay if you want to be in that market. And this is just another example of that volatility. So essentially, what happened in cryptocurrency in the last month is what happened in the stock market in the month of March last
Yep.
year. So if you were in the stocks and March of 2020 was a troubling time for you, that's a regular occurrence in the crypto markets nowadays.
I've got a solution for that. Our solution is going to be all we have to do is put it on the Nasdaq for July.
They got to find a way to list on the Nasdaq. So it's always up in
Exactly.
July, right? 13 years running. All right. Well, we'll move on to the question of the week here. We always get a lot of great questions. This one came up from a client, and I think it's appropriate for many people in any environment, but certainly applicable now with low interest rates. I'll throw it to you, Kevin. If someone's got some extra money, should they invest or should they pay off their debt?
Yeah, this is a question we get quite often. And again, it's a 6 of one, half a dozen of another scenario. It's going to depend on a variety of factors. Things along the lines of what is the interest rate that you are paying on your debt compared to what can you make off of your investments? That's one of the areas to take a look at that we have to deal with. Other factors are going to be, what are your risk factors? I mean, if your investment style is GICs and you're making 1.5, chances are your interest rate on whatever your debt is going to be higher. So you probably don't want to be sitting there investing. But if you've got more substantial sort of a balanced or a growth play, maybe you're going to make something along those lines. There's a variety of different things that have to be considered in regards to paying off your debt. There are other options, like what else can we deal with when we're looking at debt to invest in, Clint?
Yeah, I mean, you hit all the key items there. You certainly have to appreciate the risk level because you have to compare the appropriate investment to paying off the debt. I always mention when you're paying off debt, you know exactly what you're going to get, right? You know the interest you're going to save. So in that sense, it's kind of like a guarantee. And it's an after-tax money. So you can have a guaranteed after-tax return. So you have to say, well, how big is that return? And what is it going to compare if I would have invested instead? And then you have to make sure you keep risk in mind. But we should mention here that both of these are positive in terms of financial planning. Both of these are good items. Getting rid of your debt, investing more money. We're really looking at a case of optimization, right? So which one do we do to make the best of our financial plan? And there's going to be some particular circumstances. They often say if you got high level debt, so if you're in debt that's over 6%, well, that's normally a no-brainer. Just pay it off. If you have credit card debt, then absolutely get rid of that because that's probably double digit. Where it becomes a little trickier is if you're in low rate debt. If you got kind of 2-3% debt, personally, I wouldn't be in a rush to get rid of that. I think you could do better with the investments. But if you get to debt, in my opinion, once you're over 5% interest on debt, probably makes some sense just to start getting rid of the debt and build up your investments after that.
Yeah, exactly. And I mean, of course, the debt we can even define in different sectors. Is it credit card debt? Is it line of credit debt? Is it mortgage debt? I mean, there's a variety of different ones that are going to go on. Some that's locked in at certain rates, some that's not. So again, we probably will one of these times spend an entire financial 15 talking about it because you can easily do that way. But let's just touch the basics on that one for now and see where we go from here. Again, as always, if you have questions on any of the things we've talked about, including the Foo Fighters, by all means, consult with us down below and chat with Clinton and Kevin. We're more than happy to answer those questions. We won't sing the tunes, but we'll do anything along those lines. That's basically what I'm looking at. Clint, last words, what do we have to say?
I think you covered it well. I appreciate everyone tuning in. We'll see you again very soon. Take care.